What's up, guys? I hope you're having an awesome Sunday. We're here to do a quick little 1 hour free webinar, drop some absolute heat. I'll be going over some of my best trades, how to trade the trend, and I actually planned to do a whole slideshow for this, but instead, I figured that screw the slideshow. Reminds me too much of school. Ellie told me, PB, do it natural, plan out some stuff. Let's have a banger day. So that's what I did. We're going to be pulling out the web whiteboard today, and we'll be going over trading the trend, pre-market levels, key levels, some of the best setups in my opinion. And then after, we're going to carry it over into the New Age Trading Discord and do a Sunday scan at the end. So let's get started, guys. Can everyone see my screen? Yeah. All right, cool. So just basic things, guys. The trading the trend, the 5 main factors for me are pre-market levels, key levels, VWAP, key levels, 9 EMA, and flags. So going over flags, I kind of want to show you guys the key basis of how I look for trends and breakup structures in the market every single day. So let's go right into it. We'll just go on SPY. Like I was literally just pulling this up. Okay, cool. First thing popped up. Looking at SPY, right? Anyone know what this is right here? This line. So this is pre-market data. This shadowed area is the pre-market data. What is this line, guys? Pre-market high. Exactly. This is the pre-market high. So what are we going to do with pre-market high? We're going to mark our pre-market high, and then we're going to mark our pre-market low. Every single day, that should be the first thing you do every morning in the stocks that you watch. So here we go. I marked my pre-market high. I marked my pre-market low. Next, I'm going to look for a break of structure, meaning either a break of the pre-market high or a break of the pre-market low. Once we get a 5-minute close over the pre-market high or the pre-market low, that's an indication to me that we got broke a structure. We're going to go up or down. So look what happens, guys. We break the pre-market high, right? And then the 9 EMA gets lined up with the pre-market high. Once we break the pre-market high, we never ever take a position on the break. This would be the close over. We don't take a position here. Okay? You guys want to know when we take the position though? We take the position here. Why? This is called a retest. So a retest is always 10 times more conviction and higher quality than a break because you have conviction and you have a higher, how do I explain it? You have a higher rate of success on buying in the retest rather than the pre-market high break because that's confirmation that we're holding the level. That's confirmation that sellers try to take control, but buyers just swooped us right back up. So what happens right here? We got a 5-minute candle close over after a 9 EMA tap. This 9 EMA tap is crucial for holding the trend. And once you start to see space like this, guys, once you start to see space between the 9 EMA and the 5-minute candles, that's when you usually want to sell and try and rebuy on the 9 EMA tap. So then what happens, guys? We get a ripper. We get a little dip to the pre-market high. And you're going to see before we have big moves, almost every single time before we have guys, listen to this, what I'm about to say very closely. This is the sauce right here. Almost 99% of the time, I feel like, before we have like a big move or like a big, excuse my language, a big boner candle or something, we always have a little dip before it. So look what happens. We have a little dip right onto the pre-market high, and then what happens? They try to stop out as many people as they could on this candle, and then we just rip. Oh, question mark? Yeah, guys, so don't make fun of me, but when I see big candles like this, I don't know. My mentor just told me we call those boner candles, and they rip. Nothing weird. That's just yeah. So like I'll be in the Discord, guys. I'll be like, oh guys, we're about to get a boner candle, then boom, just shoots right up. And there we go. We get that pre-market high retest set up, played out to the T. Now we know the trend is up guaranteed because we played that pre-market high retest and went up, correct? Next, what do we want to look for? Once we see that we're going up off the pre-market high retest, we want to look for a 9 EMA tap. What happens? We get a quick little 9 EMA tap after we get the space. So once we see this in between, once we start to see this, what are we doing? We're selling. I'm selling. If I see a lot of space in between the 9 EMA and the candlesticks, I'm selling. I'm out. I'm good. I'm not going to hold through that because 99% of the time what happens is we go right down. So instead, I'm going to sell up here. I'm going to re-enter position the 9 EMA, stop loss under VWAP. Boom. Re-rip right back up. Then what happens? Whatever. We don't really get much space. We're slowly grinding up. But, what are we doing right here, guys? We're selling our position, right? And this is to show you that I'm not BSing with you guys. I'm not going to BS and say you're going to win every single time because you're not going to win every single time. So whatever, we get a nice little space. So we're selling here. We're going to rebuy this tap. And we're going to take the loss. That's the truth. We're going to take the loss in this setup. On this candle, that 5-minute close under the 9 EMA, we're going to be getting stopped out. But let's see. Here's win number 1. Setup number 1, win. Setup number 2, win. Setup number 3, loss. 2 for 3 with a 1 to 2 risk reward. That means that on our winning trades, if we're trading with $1,000, each winning trade, we won $200. We won $400 with 2 winning trades, and in 1 losing trade, we lost $100. So what does that mean? We ended up making a 1 to 3 risk reward off those 3 setups, which is A+, guys, especially if you let runners run. So with that being said, now I want to show you guys the key of playing the bear flag levels. So let's go right into the next day. So it's kind of crazy because this is just to show that what I'm showing you guys, this is the exact next day. So whatever, trend day up, now trend day down. So how do we know that's a trend day, guys? We mark the pre-market low, right? This is the pre-market low. So everybody always asks me, PB, do you base your pre-market off just the pre-market levels or whole extended hours? I base mine off the whole extended hours. Some people don't, but I like to go view the whole thing. So let's go to the extended hours. We're going to mark the pre-market high. That's our pre-market high right here. And we're going to mark our pre-market low right here. So first things first. Say we're just trading this in the day or something, right? We're just trading this where it's the morning. We don't have anything marked off. First of all, when we're in between the pre-market low and the pre-market high, it's only scalps if you take any trades because they're not A+ setups because you have no idea what the trend is. There's no break of structure. So what happens? 5-minute close over VWAP. Nice little continuation. Now we're looking for a VWAP retest. We get no VWAP retest, and we're not taking the trade. But if you're a real one in here and you follow my post, you should know what this candle means. What is this candle, guys? Let's see who knows what this candle is and what it indicates. Who knows what this candle is? Right here. This is called a gravestone doji candle. If you see this candle at the top after a little move to the upside or downside, that means that we're probably going to reverse. This is called a gravestone doji candle. So when you see a candle like this, especially after a nice little, dollar move up, that means be careful of your longs, sell. Then what happens? We get a 5-minute close under VWAP. We break below low of day. This is where you can take your first trade. Let me show you guys where. We break below low of day, correct? There we go. We break under low of day. We're trending downwards, riding the 9 EMA. Now what we're going to watch for is a 5-minute tap. So look, we're going down, right? Once we break below a low of day and create a new low of day, what you want to see is a retest of the previous low of day. So look, right here, we got a pretest of the low, basically we got a retest of the previous low of day. The previous low of day was 4434, and this candle hit 44335. Once you get about 10 cents within the previous, that's when you try to take starters, because what they do is they don't bring it to the exact level because they don't want you to get in, but they'll bring it very close to it, which means you want to take starters. So what happens? We get this nice little pop and wick. We're taking starters on this candle for a short, and then whatever, we're going to sell to support. We're going to sell at 442. This is why you guys also have to have your key levels marked down, because if you don't have your key levels marked down, you're basically just trading with no sense. Like if I didn't have my key levels marked down every single day, I don't know what I'd do. But if you're taking a trade in between the pre-market high and the pre-market low, make sure you're selling at that pre-market low, because there's a big chance that we're going to bounce there. So we're selling our pre-market low, very nice trade. And our next entry is going to see if we get a 5-minute close under. If we get a 5-minute close under, we're going to look for more shorts on the retest. So right here, we get a 5-minute candle close under pre-market low. Pre-market low is also lined up with a key level. 442 is a key psych level. As we can see, it's also the top of right here. So now we're looking for a pre-market low retest, meaning a green candle off pre-market low and then a rejection. So what happens, guys? 5-minute close under pre-market low, green candle off pre-market low. And isn't that crazy? Not once did we get a 5-minute close over pre-market low. If we got a 5-minute close over pre-market low, the whole trade would have been invalidated, but not once did we. Sellers held that level, and what happens? Boom, ditches to the ground. We just sold. And I actually traded this setup. I traded this pre-market low retest, freaking banked on it, and that was it. And the whole day, isn't it crazy? We're under VWAP. If we're under VWAP, that means the trend's down, guys. Not only did we do that, okay, whatever. Now we're under pre-market low. We're gonna be looking for 9 EMA taps and previous flag retest to short. So that's the first previous flag retest. And then here is the second, and let me show you guys why. Okay, so when you're trading these intraday and you're looking for more opportunities to get in short, you're going to want to mark the highs and lows of each flag. Right here is our first bear flag, 1, 2. Right here is our second bear flag, 1, 2. Okay. Sorry, let me just write something down for you guys. Make sure I'm going to go ahead. Yep. Okay, perfect. So then look, guys. We break below this bear flag, whatever, create a little bigger one, and then we went lower. After looking at this consolidation, we can see that this is a bear flag, correct? Now let's get all this other mess out the way. This is a bear flag, and this is the top of the bear flag. Okay. There we go. This is our bear flag. Oh, well, this isn't working, but whatever. You guys get the point. This is our bear flag, right? We're breaking below the bear flag. We're not going to trade this. We're not going to chase this. That's the truth. We're not going to. Or at least I'm not going to. If I will never buy. Listen, you guys know I'm the biggest trader of the trend, right? But what you guys don't know is I won't buy calls on a green candle and I won't buy puts on a red candle. I buy puts on green candles and I buy puts on green candles. So I buy calls on red candles and I buy puts on I buy calls on red candles and I buy puts on green candles. And you guys might say, PB, why would you do that? Because I trade the retest. And here's another, I'm going to just throw some sauce at you guys right now. If you're trading calls and you get in on a red candle versus a green candle, it probably makes your average at least 5% better. So that's just like if you're going to take calls, waiting for the retest, take some starters off that red candle, because it'll make you a lot more money as far as CPS and cost per shares. So look. So this is the top of that flag, right? We break down. We retest that flag again. Then we create new lows. We're going to short right here again. Also, we get some space in between the 9 EMA and the candlesticks. And then we retest that 9 EMA perfectly before creating new lows. And then we retest it again before creating new lows. And then we retest it again. But the only problem is this time is we get a 5-minute close over. So we're taking a loss on this trade. Whatever, all good. And then again, right here, we're buying some more puts at 441. Also, it's every kind of whole dollar level you can view as a level that's going to. So basically, guys, like 440, 441, 442, 443, 444, 445, 446, 447. It might sound weird, but I promise you guys, like, the stock's going to have some sort of irregular price action and kind of heavy price action towards every dollar level because it's just another dollar level, which means it's a small psych level. Big psych levels are like 440, 445, 450, etc. And yes, guys, this is also a sort of small little reversal candle right here. And if I see this candle, I'm usually buying shorts. I'm not going to lie to you guys. And then, yeah, it was just a killer day based off that. Next, let me show you guys this trade, and let's review this one. Anybody know? All right, let's do it live. Let's do it live. I know I already did all that, but I'd rather do it live. Like I said, I changed it up a lot, but okay, guys. Obviously, we broke pre-market high right away. There was no pre-market high setup. This did indicate to us that this is the stock to trade. This is the stock with relative strength. And I know I just showed you guys everything with SPY and stuff, but my strategy works 10 times better on individual names with relative strength. So we obviously know that this has strength, right? This has a lot of strength right now. It's a relative strength today. So we get a 5-minute candle close, ripper, and then we get a VWAP retest. I'm taking longs on this candle. I'll be honest with you guys. I'm taking small longs in this candle because it's just a VWAP retest on the relative strength name. So whatever, I take some longs on this setup, sell a new high of day. I take profits here. And let me show you guys the real money-making play here. So let me redo everything. What is this, guys? What is this? Right here. What is this right here? Who knows what this is? Bull flag. Exactly. It's a bull flag. A bull flag is basically consolidation after a move up. This is what a bull flag is, guys, before I go into it. A bull flag equals consolidation after a move up, okay? So let's go. Let's do a little example. So boom, 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 boom. Consolidation. Bull flag. So let's go to this bull flag here. This is a bull flag, right? Anytime you see a bull flag, this is your homework. Anytime you see a bull flag on a stock for the intraday, just mark intraday levels. So mark intraday levels, okay? You need to mark your intraday levels. So this is an intraday bull flag, correct? Intraday bull flag. I'm gonna draw my levels. There we go. This is the intraday. And you're gonna mark the intraday highs and you're gonna mark the intraday lows of the bull flag. So this is the high of the bull flag and this is the low of the bull flag. We break out of the bull flag, correct? Look, we break out of this bull flag. We have a red candle, but we retest to the top of the bull flag to the T, to the literally T. And then check this out. VWAP and 9 EMA cross. This is also called a launch setup right here when the VWAP and 9 EMA cross and it's over it. And then this is the A+ setup that we're taking. Not only did we just retest that key area at 132.80, the previous high of day, but we retested the 9 EMA almost perfectly. We retested the 9 EMA and it was lined up with the previous high of this bull flag. And this is called the bullish hammer setup. This is a hammer candle off the 9 EMA. I'm taking this setup. I'm taking long on this setup, guys. And then whatever, we scalp it, we make some money, we sell some at. This is how I'd do it. I'd sell some here. I'd sell some on this candle. I'd sell actually most of my position on this candle, and I'd probably sell my runners on this candle. And then what I would do is I know this is the stock with relative strength for the day. So what I would do is look for a VWAP retest. Do you guys think it's a coincidence that we bounce exactly off VWAP? I don't think it's a coincidence. Do you guys think it's a coincidence? We bounce exactly off VWAP. Personally, though, I'm taking calls off this candle with a stop loss under VWAP. So my stop would be about 30 cents, probably 20 cents, and my target would be previous high of day, or actually it'd probably be this 133.50 area. This would be my target because we rejected it right here. So I take longs at 133, sell at 133.60. I risked around 20 to 30 cents to make about 60 to 80 cents. 1 to 2, 1 to 3 risk reward easily. My stop would be a 5-minute close under VWAP. Yep. So I would take this setup, and you may ask PB, why wouldn't you take this setup? First of all, I usually don't trade power hour if I have VWAP setup. If I trade out power hour, it's usually SPX, small position sizing. But sorry, check this. Yeah, so that's basically the setup that I would be taking there. Power hours from 3 to 4. So from 3 to 4, the last hour of the day, if I trade, it's very small size, and usually I don't trade my VWAP setup. So yeah, guys, that was Google. I know I'm kind of going a little over. I'm bored of my time, but let's go over one more setup. Let's go over one more setup. Actually, and let's do it live too. What day is this? It's 27th. Oh yeah, this was right here. Okay, guys. So I want you guys to do this one for me. First things first, it's pre-market and we're looking at stocks. What are we doing? What are we gonna do? What are we gonna do first thing before we do anything? Yep, we're gonna mark our highs and lows on the pre-market, and we're gonna mark our key levels. So highs, lows, there we go. Pre-market high, pre-market low, marked. Next, we're gonna look for a break of pre-market high or a break of pre-market low with the retest. So guys, we break the pre-market high, 5-minute close over, and then we get a pre-market high lined up with VWAP. This is my A+ setup, guys. If your pre-market high is lined up with VWAP and you retest it, that's my A+ setup. So I'm taking longs on this setup. There we go. We get a 5-minute close over. We get a VWAP retap. I'm taking longs on this setup, and just look, it works beautifully. And then I'd sell, I'd probably sell in this candle because it's not a nice looking candle. I'd sell up here. And then I would actually rebuy on this candle because it's a doji candle after it moved down, indicating a reversal up. If there's a doji candle after a move up, then it's usually indicating a move down. If there's a doji candle after a move or candle down, then it's usually indicating up. So take some longs here again off VWAP and the 9 EMA. We get that little cross, take some longs, boom, keep riding the 9 EMA. 9 EMA tap, take some more. 9 EMA tap, take some more. Boom, just make some money all day. Ride to Valhalla, baby. Yes, sir. And then VWAP retap, basically, we can take some longs. And then after 3 o'clock, we're not trading this, but you could have definitely made money again. Also, guys, always mark your high of days and low of days. This is your first high of day, and we rejected off that exactly to the T. Check that out. We rejected off the high of day. So always mark your high of days, and never ever hold when we're going into a previous high of day. Never. Always sell, reassess, and if we break over it, then you can look for another trade based off that. But I never ever hold onto that, or I never hold hoping we're gonna break that previous high of day. I always sell that. So guys, I'm gonna hand it off to Flab or Ellie, whoever wants to go. But that was my little session. I'm also going to do a little more at the end. So stay tuned to the end. Huge announcement at the end. Stay tuned. And I'm going to give you guys one of the best tips I've ever learned at the end. Ellie or Flav, whoever wants to go ahead.
I can go. Good stuff, Evie. Amazing work.
Thank you. Is letting you share?
Give me a second. Yeah. Okay. Oh wait, actually host disabled
All right, there you go. Guys, the sauce is about to be continued with Flav and Ellie, bro. If you think that was crazy, just be ready for their presentations right now. Stay tuned.
All right. So actually, I'm gonna talk about a trade that we took on Thursday. It was a banger. We ended up riding for roughly around 145% on Qs, and I'm just gonna go, talk about a little. I'm gonna expand a little bit more as well. So anyways, like PV was talking about the levels. Levels are extremely, extremely important. I trust my levels and I trust the volume, right? So for me, if I'm looking at I knew that 363 was going to be a huge level, this area, and I was actually talking to the guys that if we had some volume there, if the volume was willing, and we were seeing a potential, like we were seeing decreasing selling volume into this area, I'll probably counter trend the move, right? So essentially, what I was looking for was for a potential bounce off at that big area, right? So we ended up getting that. So as soon as we were testing that 363 area, I started scaling a little bit, noticing that basically the volume was decreasing, the selling pressure. Notice here, as we were testing this area, we did get this big volume selling pressure, right? This selling candle here, but buyers decided to step in, and the rest is history, right? So we started noticing that buyers were respecting that area, sellers were respecting it as well. And then I started adding a little bit of size, started scaling in. I like to scale in 1/4 or 1/3, depending on the, just how I'm feeling and depending on how confident I am. And in this area, I felt really confident. I was looking for a potential move to 364. I was telling the guys that 363 is going to be a tough spot to break. So we alerted this roughly around, let me see, I think it was 12:03, give or take. Yeah. So after we saw that the volume at the buying volume started stepping in, we alerted this for a potential move. And I was talking to the guys, if we do break 364, we're not going to see much resistance until we get to 365, possibly 365.5s. And luckily, we ended up getting this area. I was a little off by 9 points. And obviously, when we got to this point, I was holding 1/3 because we're up nicely. I'm not gonna front you guys and tell you, hey, like I held the full move, which I mean obviously would be amazing, but that's too much implied risk, and I'm not about that, right? So at this point, we're scaled out a majority, and then the rest we just kind of wrote them out. We moved our stops, and as we were testing this area, notice here again, right? So okay, basically, the buying volume started to decrease a little bit, but we were still respecting this area. We're consolidating, and then notice as soon as we tested this area, we got beautiful, consistent buying volume, and then ended up breaking this big area, and then we tested that 365.5 area. So something I want to say is in regards to volume, right? You can't make extended moves to the downside, or you can't make extended moves to the upside unless there's constant flow and increasing volume. You're never going to see an extended move without, without increasing volume. So that's something I wanted to talk about regarding the trade, but I also want to talk about some things I'm going to be watching for this week. Let me get right into it. So I really like this chart here on eBay. I've been talking about this for quite a long time now. I do have some October. Oh, I don't know what the heck is going on here. There it is. Okay, cool. I really like this chart. I've been watching this one a lot. I like the idea as long as we hold the 40 to 38.5 area, and I have some October calls that I'm writing, some 45 calls. I think this is a very interesting chart. I think it's presenting a potential low risk setup, as long as we respect the levels. But yeah, I think this chart has some range as well. If we look into the weekly, it does have some serious range. I have these levels marked down as as big areas. Of course, 50 is going to be a big area. A break over that, 60 can possibly come. I think that it is going to present a very nice move, right? Let's look at another one, okay? So QQQ, we'll go right back to it. Okay, let's look at the 5-minute. I don't know why it keeps doing that for me. Anyways, these are some levels that I have marked down, okay? 362 on Qs is going to be a very crucial spot in terms of the intermediate support, okay? We break that 362, we'll probably see 359s, 360s. But 362 is the big spot that I want to see hold. And I'm probably going to play the counter trend move again. If we start moving down to the downside and we test that area, I'm probably going to try to look for a potential scalp to the upside if the volume is willing, like we did on Thursday, right? It's not that hard, not that complicated, but we got to make sure that the volume is there. Otherwise, the setup does not work. And I'm known for doing that quite a bit. So it's just we got to make sure all the parameters align, and the volume is, volume is key. For something a motto that I like to stick to is people lie, volume doesn't, right? So volume is everything, right? So in terms of like the big intermediate resistance that I'm looking at is 365.5 through 366. I break over that, I could see 368 tapping. We do have some data coming up as well. We got some employment data. I believe JOLTS is this week as well. We got employment data on Thursday along with Friday, and yeah, so it's something very interesting. I'm gonna keep this these levels marked down just in case we get that flow. Okay. Another one that I want to talk about is AMD, right? AMD is at a very interesting spot. I don't know why it keeps doing that. Okay. AMD is at a very interesting spot here. Obviously 100 is going to be a big psychological level, but I'm not very interested in the potential long if we have a clear close under 99, right? So if we do have a close under 99, I'm going to short probably to 95, probably a little bit lower, right? But I'm leaning more bullish in this for this trade, right? I'm going to be looking for dip buys as long as we're holding that area. Obviously, the big spot here that we're going to watch is that 105 area. We break over that, we could possibly test 108, 110. Big, we're at a very critical spot at the moment on AMD. So let's just, it's something I'm going to be a little bit nimble. I'm going to scale in accordingly, and I'm not going to try to force the trade itself, right? Okay, and another thing that I want to talk about is China, right? So we saw some news regarding Chinese stocks that basically China's reducing the tax on stock trading by 50%, essentially to boost their market. Of course, their market has been in a free fall, and FXI is a good way to track the market there, right? So we're tracking the large cap ETFs. I mean the large cap stocks for the Chinese market. I want to see it close over 27 ideally for me to feel more confident in the term and like going long on China's, because the problem with China, of course, we caught the move when they were talking about the potential stimulus. We were on that, all over it, very easy play. Everybody banked on that. But the thing is, we moved up very quickly, but the Chinese market's also known for moving down very quickly, right? So the corrections are extremely harsh, sometimes even worse than the actual move up, right? So you got to be careful with Chinese stocks, and you got to take your profits whenever you see them, right? So FXI, I'm going to be watching this very carefully. And now since we're talking about Chinese stocks, I'm going to be talking about, this is one that I really, really like. BEKE, right? This is basically the Zillow of China, right? So one of the things that they're going to be trying to boost is real estate, right? So this is something I'm going to be looking at very, very carefully, right? I want to see a move over 1670 for me to actually look for like a really good long, right? So that's a big dark pool spot, and I think it's going to be very hard to break. But if we do close over that, then I do like the idea. Now that's going to be resistance, turn into support, but we need to see a beautiful close over, right? Another one that I'm going to be watching, they actually have earnings this week. They have earnings on Tuesday. So NEO had a great move, and basically into the stimulus talks that ended up just blowing up in everybody's faces. But this is a chart that I'm going to be watching for a potential move to the upside. If FXI gets to that area, we get to see some flow into Chinese stocks. This is one that I'm going to be looking for potential move back up to 15s. Another one that I'm also looking at is, of course, BABA. Everybody loves BABA. But yeah, this is it's a nice little uptrend at the moment, and I'm gonna see if we can get a nice little bounce from here and possibly test go back to 100s or whatnot, right? But like I said, I want to see that flow first before I'm not trying to guess this trend, but I want to see the flow first before I actually make the move. Maybe I might take some scales in maybe tomorrow, but very, very light size with some longer dated calls, or probably some equity itself, some comments. But we'll figure that out as as time progresses. Something I also want to talk about that's a lot of people are kind of forgetting, bonds, right? The 10-year. We broke over that beautiful trend. So this is very significant, right? What I want to see is if we do break over that 45 area, I don't know why it shows this anyways, but if we break over this like I don't know why it says the $4. Give me a sec. Yeah, if it breaks over the 45 area, that's something I want to like really watch, right? I don't know why it says that, but yeah. So this is something I'm going to be watching very closely. Seeing some beautiful strength. You know, it's not very good for the bulls, right? Another one that I want to be talking about is, of course, the dollar. Dollar's been seeing some really good movement. And it seems like we're probably going to break out over here, right? So this is something very critical as well. Not looking good for the bulls. But yeah, just stay nimble, I'd say, in terms of looking into your swings and whatnot. Oversizing, probably not the best scenario there. Another one, a commodity, wheat. I'm gonna be looking if we bounce off this this key level if for to the upside. So another, like I said, it's not a good sign. So I'm just gonna be watching that very carefully. You can also look into oil, right? You can look into oil for a potential move. You can look into XLP for a potential move as well. Obviously, we're testing this very interesting area here. Once we get to 71, if we break under, probably 66, give or take. But this is something I'm going to be watching very carefully as well. But yeah, that's all I got in terms of what I'm watching for this week. Like I said, I'm more than anything, I'm going to be watching my levels on QQQ. Like I said before, the 362 area on QQQ is going to be a big intermediate support. If we do break under, I'm probably going to short to 359, give or take. 359 maybe to 360, low 360s, and I think it could be a beautiful layup. If the volume is there, I might counter trend it. But if the volume is to the downside, then I'll short it to hell, and then I'll be completely satisfied with that. But yeah, that's literally all I got. I'd say for this week, I'd say a little bit nimble. And play accordingly. Don't try to overcomplicate everything. But yeah, that's all I got.
Perfect. Thank you, Flav. Appreciate you. Ellie, you ready?
Yep, I'm here. Let me just set up real quick. All right. So how we doing? Okay, is everyone doing all right? Everyone, we learning something? Yes, no? Okay. Ready for the D. Oh God. Okay. So I don't like when people say I'm ready for the D. You just made me nervous. Thank you, Sekaris. Okay. So I'm gonna share my screen real quick, and we're gonna go over kind of how I trade and how I approach the market every day. And yeah, make sure you guys all have your notebooks ready, right? Yeah, so a lot of questions about recording it. We will be sending you a link. Don't you worry. Okay, so 5-step process I approach the market every single morning. Step 1 is the trend. So I don't know how many of you have been following me for a long time, but what do I use to identify the trend? What do I use? What do I use to identify the trend? It begins with an E and ends in a MA. EMAs, yes. Okay, so I use 2 EMAs. I use the 8 and I use the 20. Now, if price action is above the 8 and the 20, so we're going to write above, okay. What does that mean? Right? I use a 10, so this is 10-minute. I use a 10-minute candle system and a 30-minute. Price action is above the 8 and the 20. What does that mean? The trend is what? Mega bullish. We're just going to write up, okay? We're going to keep it real simple. The trend is up. Now, what if price action is below the 8 and the 20? What does that mean? Down. Okay, right? Simple concept, right? But why do we like trading the gulag? Exactly. Yeah. So why do we like trading the trend, right? It's because the trend allows for micro errors on your entry, right? The trend will carry you to the motherland, right? And so the motherland will be up, right? And then to the gulag is down, right? You don't have to be so strict on your entries, right? When you're bottom ticking and top ticking, right? Think of it this way. If you're going to top tick something, you may make 20% on the downside move, unless it's a fake breakout, right? you may make 20%, but if your stops aren't super tight, right, in your 0 day, that boner candle is going to wipe away your gains for the whole day. You're going to lose 40, 30, 50, maybe even 100% instantly. Same way on the downside, right? If you're going to bottom ticket, okay, what's going to happen? If your stops aren't super tight and you're not using volume confirmation, you don't have the high level understanding, you're going to get blown out every time. So that's why we teach the trend. Next, it's very simple. Price is above, okay, we're going up. Not always, but just for this example, right? Below, going down. So people ask questions about the 8 and 9 EMA. The difference between them is about 5 cents on the underlying stock. 5 cents, and that's a rounding error. So don't stress about it too much. It doesn't matter. The point is how it actually works. Now, let's talk about the range. Okay, the range. What we're looking for is you want a range break. So range is identified as price action ping-ponging level to level to level to level, back and forth all day. Okay, what we're looking for is the break of this range. Why? That's how you get those explosive moves, right? Ping-ponging all day doesn't interest me. There's 8,000 stocks in the stock market. Why am I going to play something that's ping-ponging back and forth for 10% when I can hop on the train, on the trend train, we call it, and ride to Valhalla and make 200, 300, 400, 500%, right? If you have a small account, okay, when you're in a range, say you have $1,000 in your small account, okay? And each contract is, let's say, $100, okay? So what's going to happen? You can scalp this range, right, and make 10% each time and stay with a 75% win rate. You're going to make 75 bucks. However, if you find a stock that's breaking out of the range, you can buy $300 in contracts and you can make, double, triple, quadruple your money if you play it right. So that's what I teach, right? It might not work for you, and that's fine. But I'm just telling you what works for me and what works for 99% of my students. Next, we're going to get into levels. So levels, I use pre-market. So we're going to do PM. Okay, we do pre-market, highs and lows. PB just went over that, right? It's the highest point pre-market and the lowest point pre-market. Why do I use the pre-market high and low? Is one of my first things I look at when I'm looking to trade things intraday. Why do I look at pre-market highs and lows? To find key levels? No, it's because I'm looking for the range break, right? There's a reason why we're going in order here, right? I'm looking for the range break because if we're stuck between pre-market high and pre-market low, there's a high chance we're just going to ping pong back and forth all day, right? So that's why we're looking at the pre-market highs and pre-market lows. We're looking for that explosive move, right? If nothing's exploding, right? Like it's FOMC or some nonsense data bullshit day, there's no explosive move. So I'm going to sit in the sidelines because I like clean, easy trends to make clean, easy dollars. Okay, so that's why I look at the level. So we use pre-market high and low, and then we're going to write Y day, right? Y day, and we're also going to look for the high and low of yesterday. Why are we looking at the highs and lows of yesterday's candle? Why are we looking for that? Someone pop in the chat. One of you got it, but I want to see a little more activity. Why are we looking at the yesterday's highs and lows in the pre-market highs and lows? Yes, we're looking for range breaks, right? So if a candle is looking like this, okay, so this is, say, I don't know, Monday. All right, now we're trading Tuesday. The candle's looking like this inside. That's not really going to interest me. You want to break this to get that explosive move, right? I don't want to play and chop, right? Chop's an account ruiner. That's how you drain all your capital and you make zero and dollars. So that's what I'm looking for, right? So you get your pre-market high or your pre-market low break, and then your next target is going to be yesterday's low or yesterday's high. That's how we're going to do it. Next, we're going to get into candles, right? Candlesticks, one of my favorite basics of candles. So we know a candle looks like this. It looks like something your mom probably burns, right? So there's your little top, okay? And then sometimes you have a little thing on the bottom. What is the most important part of a candle? Hey, and I'm telling you right now, it's not the scent of the candle, right? I'm a big vanilla guy, It's not the scent. The wicks, exactly, the wicks. Why? Volume, of course, yes, but we're doing this at a high level understanding. Why are the wicks so important? As I tell my students, I tell everyone on Twitter, no one, actually 99% of people listen to me. Some other people think that they don't matter, but however, they certainly do matter. But what do the wicks tell us? Tell us exactly who's in control. It's exactly what they tell us, right? So we know a top wick means sellers, okay? Top wick means seller. Think about it, right? As prices pushing up, right? Some seller comes in and it goes back down, and that's where you get your wick of the candle. right? What does the bottom wick tell us? What does the bottom wick tell us? Buyers. Exactly. So we always want to pay attention to where the wicks are. That's all we're going to talk about for this. Now, as we talked about, we have the boner candles, right? Right? There's no wicks, right? But it's also not a battle between buyers and sellers, right? It's just straight price action through the moon. And now this is a red candle downside. It just means there's a bunch of bears in there crushing it. Right? So understand what those mean, right? Candle sizes matter, everything. So we got candles. So now we're gonna talk about Big Zuck. Who knows who Big Zuck is? Who's Big Zuck? He's a famous trader. Yes, Mark Zuckerberg. Yes, the reptilian shapeshifter, the overlord. Right? I'll be honest. Any of you guys actually like Mark Zuckerberg in here? Like, we all hate him, right? Can we all trash talk him? Like, no one's gonna get offended if we make fun of the reptilian shapeshifter, right? Yeah, he's a loser. Yeah, screw that guy. Yeah, we're all dude. Dude, I might get Elon tatted on me, bro. Yeah. We all like IG because we all like the baddies, right? But like, other than that, he kind of sucks. Okay, so we're gonna use everything we just did, right? 4-step system, and we're gonna go over, right? You look at my Twitter, I made 500% on one play on Friday. That was my only trade, 500%. We're gonna go over exactly how we did that using this 4-step system. So we'll flip over here. So I use TradingView, and before we dive into it, we have the red lines and the green lines, right? So red means down, green means up. We're not going to get into Tesla too much. That's going to be saved for the Sunday scan, but we are going to get into good old Meta. Zuck is a cuck, as Elon says. Okay, so here's Meta, right? So let's do kind of analysis on Meta from the like an overview, right? So we zoom. First thing you want to do is anytime you look at a chart, right? All right, well, the funny part is we have all your names. So, okay, so let's look at the chart on Meta, right? So Meta, we know, had a massive gap, right? So all the Twitter gurus, right, love Meta at 300 for some reason, but they didn't like it down here at 100, right? Some of them didn't. But look, we filled this whole gap, right? This is a massive gap to fill from $100 all up to 300. So we know everyone that's been in deep profits for a while is going to buy this gap up. So it's looking overview, right? No indicators, nothing. We filled the gap, right? And gaps work because everyone knows they exist. And the top of the gap is extreme resistance. And you can see we popped back over it, and then we've been heavy ever since, right? Now, let's look at a trend on that. Okay? So let's look at a trend. So we're going to take our trusty trend line here, and we're just going to draw it up. And it's probably not the best if we draw it from there. Let's draw it from here, right? So that's our uptrend, right? Very basic, probably not exact. There's going to be some TA guy in here saying it's not exact trend line. It's not what we're getting here. The trend was up, okay? And look, we broke the trend, and there's no coincidence that we came, tapped the trend, and went back down. So now we know over in a high level sense that Meta is in a downtrend, right? The trend structure is showing a trend shift, everything like that. So we're going to look at our 10-minute chart. So here we are in our 10-minute chart. Okay, so as we talked about, right? So we're going to mark our pre-market high. There's a reason why pre-market high is green, because if it breaks pre-market high, we're going to go long. Okay, if it breaks pre-market low, we are going to go short. Nothing crazy about this, right? So that's why we make it green and red. So J-Pal was talking on Friday. However, people forget that Jackson Hole was pre-written and the speech was leaked early, so everyone knew what he was going to say. What happened? So we look at it. We don't have any indicators on, right? Straight price action. So what do we see? Meta, okay, comes out and it's holding yesterday's lows a little bit. But if you zoom in, okay, I should move my screen real quick. If you zoom in, you can see that there's clearly sellers in the zone of pre-market high and yesterday's low. So automatically tells me that there is a seller here, which means it is bearish. And now, what happens at 10 o'clock? What happens at 10 o'clock? What do you notice about this candle here? Huge selling. Hell yeah. I see that candle. That is a ugly candle. Okay. Very ugly. And what else does this candle do? It sells all of the buyers from pre-market low to pre-market high and yesterday. So look, it's automatically a bearish setup. So We see that candle, right? I'm not one that slapped this long, right? I wait for my 10-minute confirmation. I'm a very patient individual. And what do we notice? We come up and we tap pre-market low to the penny and dump. And contracts from here to here paid about 506%, right? Remember, if you took one contract, right? One contract, okay? These contracts are about $100. You made $400 a contract in a half hour. So that's what I want to show, right? Sure, if you bottom tick this down here, you made 20%. No one cares. 500% is way cooler than 20% every time. And now, let's add our indicators in here, okay? So we just add our 8 and 20. What do we notice about Meta? So we just added the 8 and 20 EMA. This is what I use every day. What do we notice? It's below the EMA. So why are we going long? It's a bearish trend, right? So now we know the trend is bearish. We break pre-market lows. You wait for an 8 tap, slap a bunch of puts, and ride it down and make 500%. That's all you got to do. Don't come in here and try to overcomplicate it, right? The problem is people come in and the price just chops, makes an inside day all day, and people get so confused. Look, you break pre-market low, you wait for your trend to flip, and you take it short. That's all you got to do. That's all you got to do. That's what I want to talk about. But now it gets even more interesting. Because look, we're going to look at QQQ. Okay. Look at QQQ. So sure, that sounds really easy, right? Really easy, right? Look at QQQs. Okay. So this is what we talked about all day. So price action is above the 20 and the 80 EMA. Sure it is, right? It's clearly QQQ and tech is bullish. And look, we draw a trend line, right? You can take off all your indicators. Doesn't matter what indicators you use, right? Draw a trend line. Low to high. The trend is up pre-market. And then what happens? We break it and we go to the gulag. So I see something like this, right? I see these heavy selling candles in here, right? I see we broke below the trend. I'm going to find the ticker that looks like dog shit. And I'm going to short it like it's dog shit. And if it says this was the opposite, right, where QQQ is ripping, I'm going to find the rocket ship. And I'm going to ride that rocket ship. Me and Elon, we're going to be buddies, smoking weed the whole time, going to the moon, right? That's what I want to do. I don't want to sit and play and chop. So that is the difference. So you don't need any indicators, nothing. Just draw a line. Look, trend's up, breaks a trend. We're going short. We're shorting everything, right? Literally everything. The funny reason is if you pull up Tesla, there's actually a picture of Elon down here of him smoking weed. So I made the joke. I don't smoke, but look, here's a trend, right? Trend's up, breaks a trend. We're going short. There's no reason anyone, okay, I'll tell you right now that you should be long in this. You're asking for a real bad time, right? And then we add our indicators on. Look, our indicators line right up with it, right? Our 10-minute trend breaks. We flip the indicators. Everything's above it. And then we just chop out the rest of the day. Look at this trend line here, right? So this is the trend line that we drew pre-market. We rejected off of it 1, 2, 3, 4 times. There's a reason why we rejected off that level, right? A million different ways to look at charts, but that's what you want to do. And if you want to go short again, right? Sure, we're below the 8 and the 20 and stuff like that, right? But look, guys, you didn't break pre-market lows on QQQs, right? You did here. We're not chasing this candle. Look how far you're away from the 80 EM. You're going to wait for a tap up. Doesn't work. Right? So your risk would be here. All kind of makes sense. So let's go tie it back in. Let's go to our whiteboard here. So let's talk about the big Zuck. Okay. Big Zuck. Let's go over 1. Okay. It was below the 8 and the 20. Okay. Below the 8 and the 20. That's a horrible looking 8. Don't judge me. 2. Okay. Broke pre-market lows. And wide A low. Okay, so you know it's a range break. Okay. 3, we identified our levels, right? Same part of it right here, right? Levels and range are exactly the same. Okay, so we're just going to draw an arrow up here. 4, okay, our candles. Okay, what do we notice about the candles? Huge ass seller, dude. Some guy came in there and went, LOL, no. Okay, so we're going to write sellers. We looked at the wicks, right? And then we're going to go to number 5, and then Zuck got cut. And that is it. That's how we trade it. That was the only trade. So someone asked, how do you avoid getting faked out before the breakout? It's easy. I sell breakouts, right? So say this is our breakout level here on a downside push, right? So sorry, it's our breakout level. So price action comes out and we start dying. All right, start dying. Right, we come to the breakout level. Okay, I'm not buying contracts here. I'm not trying to force price action through the breakout because I know 90% of people who have no idea what they're doing are buying this breakdown. Okay, breakdowns, if you're with A+ execution, have about a 60% chance of work. 60%. Okay, that's an A+ execution. Most of you probably don't have A+ execution and don't journal enough to know, right? So you're probably sitting at 20 or 30%. So what I'm going to look for is I'm going to look for a bounce, okay? Bounce up, and my indicators are purple and blue, so let's get the purple one here. I'm looking to bounce up to either the 8 or VWAP, right? All my homies have gold VWAP, something like that. And then we're going to take the short, okay? So say the 8, like blast through the 8. All right, we get the VWAP. We start getting those big, ugly wicks up here, right? We're going to take that. We're going to sell 75% of our contracts, okay, at the breakdown spot. And then if we actually do get the flush, we're going to have runners and they're going to go 2, 3, 4, 500%. So that's how you avoid getting out. You sell breakouts, okay? So on a, for example, right, PB talked about in red candles, right? He buys calls, okay? And then on green candles, that's going to look big and ugly. Green candles, he's buying puts, right? Because he's looking for bounces, or he's buying the dip or shorting the pop, right? So that's how you do it. That's how you increase your risk reward. How many times, be honest with you guys, right? Say that this is the breakout level on a stock, right? So this is, we're saying this is 500, right? How many times has price action been vertical, going right up to your spot, and you are hammering calls right here? Absolutely hammering calls in the spot. And what happens? Right? Stock no go up anymore. And you stop out, right? And then what happens is dip buyers come in here, okay, and they buy this dip, okay, and then you finally get the breakout. And then you're sitting there like, oh, look, what the heck? Like, I knew that was going to happen. Like, I knew. And then you get all tilted and you end up right on the day. How many times has it happened to you guys? You can be honest, right? It's happened to you guys before? Don't put in the chat. It's happened to me before when I was new. Every day, exactly. So enough times where it hurts enough, right? So what you're waiting for, right, is don't buy the breakout, right? You want to be the person that's selling. Okay, I'll use red here. You're selling 75% of your contracts right here, because you know you've been bagged enough times buying this breakout. Then why not be the generous person you are and just donate some of your contracts to the guy who doesn't know what happened? Donate it to him. Think of it as you're being a kind service member of the stock market. You're like, hey guys, thank you so much for boosting my confidence on my play, and I'm up 25, 30%. Let me just dump them off to you real quick, and you can figure out if it's going to break out. I don't know if it's going to break out. If I knew that, I wouldn't be talking to you, okay? If I knew what stock's going to break out at exactly what point every single day, I'd be a multi-billionaire. Me and Elon Musk could be flying rockets, smoking joints. But I don't, and he doesn't. So that's what you have to understand, right? Sell breakouts, right? And then what you're going to wait for is you're going to wait for maybe a dip down to the breakout spot, right, for your retest, and then you take it back long, right? And you still have your 25% left over. So when you're adding, let's say, I don't know, 20 contracts to your lot, right, you're averaging up, right? You're averaging up. You set your stop right here, and then, dude, no matter what, you have a green profitable trade. Yeah, so you can do that, right? So I'm not coming in here, right? The biggest fallacy I see people, like, they know 500's at big level. Like, I'm not coming in here and taking this short, right? Let's measure the move, right, real quick. So from here to here, okay, is a lot of money, okay? And from here, okay, to here is a lot less money than here, okay? Just visualize it, right? So that's why I don't like that, because what could happen is, right, we talked about that 60%, right, is this stock, right, could keep ripping higher, and then if you're short waiting for that dip, right, you're going to get run over. That's what happened with QQQ, right? The last, I don't know how long, 6 months, where we literally went vertical. What kept happening is people coming in here buying the top over and over again. We just kept squeezing them, right? When the trend is up, you buy dips. When the trend is down, you short pops. So that's all I have for that. Did you guys enjoy it? Anyone learn anything new today? And be like, oh shit, it makes sense.
Yeah, you guys ready for the big announcement I'm about to announce right now?
Yes. It clicked. Good. And you guys can always reach out to me. So I day trade live every single day with PB. So I talk about this shit all the time.
Yo,
So
if you guys thought this was crazy, we do this every single day in New Age. I mean, twice a week in New Age, we do 2 educational classes. We do a Sunday scan. We live trade every single day. So out of curiosity, after listening to this Zoom, and also we have a 10-hour mastermind course by Jada and Brett, Jake Wujastik, the best traders. Out of curiosity, should we open a little discount code, like a big discount for you guys to join and have 2 of these weekly educational classes every single day, every week? If you guys, this is really going to take you guys to the next level. So if we get like 50 people to say yes right now, I'll do it. A big discount code. Oh, all right, guys. Holy crap. All right, should we do it? All right, there you go, guys. Use code BANK. We live trade every single day. I live trade in class every day. I'm a co-op student. We do 2 weekly educational classes just like this, but 10 times better. And actually, the next 50 people that sign up, we're in 20 minutes, we're going live again and doing another Sunday scan. So in 20 minutes, we're about to announce all the plays that we're going to watch this week. There you guys go, guys. Use that code right now. Spots are going to sell fast.
another question. Should we do a monthly free webinar, PB?
Yeah. Oh, yeah. We're about to do monthly free webinars. If you guys really enjoy.
Yeah,
But it depends. It depends. Let's see how many people really want to take their trade. And the only reason we charge guys is because we need it to be a good amount of people, individuals that are actually interested in doing this stuff. We can't just have a bunch of free people, you know. So everybody use code BANK. Holy crap, it's blowing up right now, guys. I'm just watching it. Yo, that's crazy. But use code BANK at New Age Trading. We're about to go live in 20 minutes again with the Discord community and do another Sunday scan. So use code BANK, New Age Trading. I just put the link in the chat. Don't miss out, guys. Wow, a lot of the spots are already sold. That's nuts.
Yes, it's nutty.
All right, guys. Have a good one. DM me if you need any questions. I hope you guys enjoyed. Sick webinar, guys.
Peace, everyone.
We do classes about small accounts and stuff. We teach all of that. Peace.